Oh, okay.
Yeah, I was there.
So, what time did we finish? Didn't last long, did they?
Welcome to the Audit and Risk Advisory Committee meeting today. I'd like to call the meeting to order. Are there any disclosures of pecuniary interest? The agenda for the May 6th meeting to be approved. Would someone like to make that motion? Councillor McHugh and Councillor Quinte. All in favor? Thank you. Public input. Is there any public input for today? No? Okay, we'll move into delegations and presentations. Mr. Jeff Lay from Wilkinson's and an overview of our audited financial statements for the city. Thank you and welcome.
Thank you. Just before I get to the financial statements, I have to go through some administrative part of the presentation again, similar to last year's. So once again, thank you on behalf of Wilkinson and Company for appointing us as your auditors. The audit findings report is the administrative piece that I have to go through. It's the second half of the audit plan that I went through at the start. It's the back end. The audit plan at the start sort of lays out what we're going to do, the way the audit is going to be formatted, whose responsibilities are what in the overall audit process. The audit findings report is almost like a report card being done after the fact. So based on the audit that we performed, testing did not reveal any issues with the completeness or accuracy of any of the information. There were no issues noted on any of the testing of the revenue, deferred revenue, any of the areas that we had identified as higher risk in the audit. There was no identified issues or instances of management override, management bias on journal entries. Everything that we tested had the appropriate documentation and sign-offs that was required according to your policies. Initial materiality was set at $600,000 based on preliminary numbers when we were out. When we got the actual numbers, because of the volume of the expenditures and the increase in the size of the municipality, materiality was increased to $750,000. Not really an impact on the audit because there were very few items that we felt needed to be adjusted. If we had a bunch of entries that were close to the $750,000, or if they went over the $750,000, and we disagreed with Caleb and his staff about whether they were going to be posted or not, we would have an issue on the financial statements. Most of the entries that we have were provided to us after we started by Caleb and his staff, so really there aren't very many items on that unadjusted entry list. Typically, an accrual got reversed after we started, so we were given an adjustment to put through. So the change in materiality really did not impact the audit, but it is there based on the increased size of the municipality. During the audit, we did not identify any significant deficiencies in internal control. If we had, they would have been presented here today. There were no significant unusual transactions. Again, even if we find a rational reason for these transactions, if there are significant unusual transactions, they typically would be presented just to make sure everyone was aware of what they were. There were no changes in significant accounting policies other than ones that are disclosed in the notes, and I'll touch on that in a minute. There was no fraud or illegal acts that would cause a material misstatement on the financial statements. We didn't uncover any fraud or illegal acts or even suspected fraud or illegal acts, material or otherwise. We had full cooperation with management during the audit, which, as I say every year, is a pleasure to work on an audit where we don't have, not issues with management, but we're coming in spending 300 hours asking questions, pulling people away from their daily job. They still have obligations to get their daily job done, and we're coming in asking them for a lot of information. So it is always stressful on internal staff as we're asking them to do double duty, deal with us plus do their regular job. So on behalf of the staff that I had out here, they said thank you because it was a easy audit for them to deal with the people that were here. So Caleb and your staff, thank you. Probably one of the most important parts of this is that Wilkinson and Company confirms that we are independent. have been and still are independent in order to do this audit. Perception and fact, as I've said in the past, when it comes to independence, are two aspects of it. The easier one to deal with is factual independence. We are independent according to all the rules that we have to follow. The harder one sometimes is perception. If there's a perception that you're no longer independent, it's sometimes harder to deal with. We're not aware of there being any issues or any independence threats that are out there. If any of you are, I would ask that they, depending on your comfort level, they can be raised directly to me. They could go through Caleb to me. But I would ask if there were any concerns that they be addressed. It's easier to deal with it head on than it is to find out after the fact. New accounting standards or auditing standards. In the current year financial statements, as we discussed last year and as part of the planning, there's two main new standards that are in, asset retirement obligations and a measurement gains and losses section. The second one was just fair market value of some of your investments. There's a new statement that has to be in your audited statements. Fairly straightforward. There's just a minor adjustment there. The more complicated one was the asset retirement obligations. It reminded me when we were working on it of the capital asset policy that came in 2007 about having to now bring in items that hadn't previously been on your statements. Fair amount of work went into this by Caleb and his staff in conjunction with our staff on identifying, measuring, having a policy to disclose what these asset retirement obligations are and how they are disclosed on the statements. I won't get into specific details. I'll leave that for Caleb if there are any questions, but it was a fairly in-depth process, one, to identify where there were potential obligations for asset retirements. And the easy one that everyone thinks of is asbestos. You have buildings with asbestos in it. Down the road, there's going to be financial outlay of cash to clean it up so you can sell it or dispose of it. That future liability has to be disclosed in present value terms on your statements today. So it's a matter of going through and trying to make sure that you've identified all future liabilities to clean up assets and show them in today's dollars on today's statements. And there were quite a few of them that they had to go through and identify. On to the actual, were there any questions related to the audit finance report or specifically the asset retirement obligations?
Would they be when Matt Hott's presentation is, after his report? Would they be held till then, or should they be now?
I'm not sure the rules of procedure, but I think we're fine to ask questions now.
Okay, great, thank you. Would anyone have any questions?
Well, I don't have a question, Mr. Chair, but I just wondered if you were able to uncover the amount of cash that he gives to the mayor?
Not yet.
Not yet? Well, I ask him for money. I often ask him for money. You know, I get the same answer. He doesn't have any. So, I love that answer. Really, I do. Because, I've been at this a long time, but the most important part of any operation is that we trust the people we work with, and we know that they're handling everything efficiently and effectively, and I appreciate that. Thank you. And you too. Appreciate the audit and the fact that we can show people, yes, what we're doing is efficiency. Thank you.
I just wanted to agree with Mayor Harrison. I'm very happy to know that all the decimal points are in the right spot and everybody is happy to help out and give us a great report and cooperate with your firm to make it all happen. Thanks.
Anyone else have any questions? Thanks. I had noticed a couple things. One was the increase in reserve fund transfers are getting close to the city's depreciation of assets, which I think is a significant accomplishment. The next step we have to do, because everything's increasing in value and costs, is to get it to the asset management plan, but at least we're making progress in that area. And I did have one question on the water and sewer statements, which I've discussed with our Director of Finance. And it was, the cash values went up by $7 million, And our long-term debt went up by 9.1 million, and I just wondered why those significant increases at the year end, but
Yes, Chair, I can answer that directly. So at the end of 2023, the city took on a significant amount of debt for some of the large water and wastewater projects. So these were prior capital projects that were planned and debt was planned. The prior year, so 2022 year end, we had self-financed a lot of that work. So you would have seen lower cash as well as lower debt. Now in 2023 year end, we've taken on that debt, so the cash went up and debt went up as well.
so it's just a timing issue.
That's correct.
Thank you. Yes, Councillor Siddell?
Thank you, Mr. Chair. I do have questions. Are we skipping to the financial statements? Is that where we're going? Okay.
No,
It doesn't matter. I can wait.
I had just gone over the audit findings report. I hadn't gone to the financial statements yet, but,
oh, I thought you asked if there were any questions.
oh, I'm sorry, I meant specifically on the audit findings report.
Okay, sorry.
Yeah, I'll wait until the
Sorry.
financial
Sorry, go
statements. No,
ahead.
that's good.
On the actual audited financial statements themselves, financial statements are prepared internally by Caleb and his staff. Financial statements and the notes, so our involvement, or what's sort of you've paid for, is the the independent auditor's report, and the opinion that's on it, which, in our opinion, I'm not going to read the whole thing, but there are no issues on the audit opinion. It's a clean opinion. The accompanying consolidated financial statements present fairly in all material respects the financial position of the municipality as at December 31st, 2023. On the financial statements themselves, if you look at page 4, the consolidated statement of financial position, just one of the highlights that ties to the asset retirement obligation, as you can see, the landfill obligation last year was $1,580,000. It's zero this year. And right below it, the asset retirement obligation is $2,145,000. That's really where you see the impact of this new asset retirement obligation policy. The $1.58 million last year landfill obligation has been rolled into the asset retirement obligation, and then other items were added to it as well. So there's zero this year under landfill obligation, but directly below it is the landfill plus other items that got added to it. On page 5, the statement of operations, you can see where there was the reversal of the landfill obligation. The $1.58 million was brought into revenue, and then the addition of the new obligation is added into the capital assets. So it's kind of a quirk in the way that accounting works. You're reversing a liability into income, and then you're setting up a new liability by adding it to the asset. Several new notes. Page 14, note 2 is the change in accounting policies that highlights the new financial instrument note as well as the asset retirement obligation note. Those would not have been there in the past. And actually, sorry, on page 12, note 1M is new as well, just for the asset retirement obligation. Note 11 on page 19 just has a little bit more information on the details of the asset retirement obligation in terms of the dollar value of them. I wasn't going to go through line by line through the notes because, again, they are management's financial statements and your internal notes. If there were questions, by all means, please ask. I may have to defer to Caleb if it's about specific numbers.
Thank you. We go with your questions now, Councillor Siddell.
Thank you, Mr. Chair. I guess my first question is regarding the surplus. So, and I understand municipal finance, so I understand it's not the big surplus I'm talking about, it's the cash surplus. So the cash surplus was reported to be about $900,000. And I'm just wondering, the statements don't seem to break down how there's no report. I'm just wondering if you could give some insight as to how we ended up with basically a 1% of our budget in surplus, so the $900,000, and what the breakdown is for that.
Through you, Chair. So, yeah, the financial statements are accrual basis. The cash basis, we do report to council on a quarterly basis. So the Q4 report would have shown what we knew at that time of a surplus, and we finalized that number of about 900,000 after the statements have been finalized. I'll just let our manager of finance just talk a bit about what makes up that 900,000. We were pretty close to being within 1% variance of our overall budget, and so that 900,000 has a few components. I'll let Mr. Hodge talk about it.
Thank you, through you, Chair. Yeah, the Q4 report summarized some of the one-time non-cash things that made up the surplus. One of them was a one-time land sale. There was a road closure sale that also was processed. The sand salt came under budget. Some of the software as a service came in under. Overall building repairs and maintenance came under. This surplus is for all accounts for the whole city-wide, so there's lots of ups and downs for actuals compared to budgets, but those were the main ones. There's also the other side of that where the bag tag revenue was lower than we had budgeted for, so that brought us a little bit the other way, but overall we're very close to budget, so the amount that got transferred into reserves overall pretty close matched what we had budgeted for.
Okay, following that, my question is about where does that $1 million go? I know it goes transferred into, I believe it's transferred into reserve. Can you just clarify where the surplus is?
Yeah.
What happens to it?
Yeah, through you, Chair. We do have a reserve and reserve fund policy. So we passed a bylaw in 2021. So through that policy, we're able to take 50% of that surplus goes to capital asset reserves, and then 25% of the surplus goes to capital asset growth. So this year was the industrial land reserve, and then the rest goes to a debt elimination reserve. This year was the Wooler Bridge debt elimination reserve.
Okay, and will that come back to council just to show the transfers, the cash, and how it does get allocated?
Yeah, Chair, all of the reports here will go to council, so there's a report here on reserves that will go to council. Just making sure the recommendation is to, committee receives the reserve and reserve fund report. So the policy basically allows a transfer to reserve based on the policy, the 50%, 25-25. So it really is just to receive the reserve fund reporting, and that goes to council. If there's a recommendation to change the way we do this, we're open to suggestions.
I guess my only question is, does any of it, maybe I missed this when you were speaking, is some of it, does any of it go to like a tax, a reserve to help offset future tax increases? Because we've had significant tax increases for the last couple of years. And I'm just wondering if, because we do have almost $1 million surplus this year, I know it's allocated because land sales have to go to certain places, if any of it would go to like a tax stability reserve?
We're just taking a quick look. I'm just want to answer.
For these limits?
Yeah, so they continue stabilization, but it doesn't talk about when we put it into that reserve.
No, it'd just be during the regular operating budget time.
Yeah, so I believe at the year-end surplus, I don't believe any of the portion goes to a tax rate stabilization reserve. We do have stabilization targets for all those reserves combined, but we don't have a specific tax rate stabilization reserve, I guess, policy, or the reserve policy doesn't speak to putting money automatically into the tax rate stabilization reserve.
But doesn't it all, I'm sorry, Mr. Chair, through you.
Yes, go ahead, Mr. Mayor.
This all comes back to council, so if we have a surplus, then that, and you have designated that amount, that will come to council when we do our budget, and we can use that wherever we feel necessary to, either on a project or on reducing taxes, whatever we can do is what we'll do as council.
Yeah, through your chair. So that's correct. The reserve balances are what you'll see during budget time, what we have access to. But as Councillor Stell mentioned, there's really not much, if anything, in the tax rate stabilization reserve. Most of our surpluses, all of our surpluses, go to things like capital reserves, debt elimination reserves, and other reserves. So there's really nothing in that tax rate stabilization reserve for council to utilize to offset tax increases.
Thank you. And I believe Councillor Siddell is saying if it goes into a specific reserve, you can only use it for those funds. So she's asking if it go to a reserve where you can use it just for the overall budget. Correct?
Mr. Chair, just on that same topic,
Yes, go ahead.
like that policy was set up so that if there were any reserves, which doesn't always happen, but it's always nice that it does, that like the money's not going anywhere. We are putting it to really good use, and one way or another, the taxpayers would have to pay. So if we have money in reserves and we're able to use it to various projects, such as one of them is like debt elimination or acquiring land, we still need to do those things in the future. So it's not, it's more of a long-term benefit the way we're doing it now, to set the money into reserves, set it aside for projects that we know that we're going to have to deal with in the future, and then the city already has building reserves such as acquiring land for the future, because that is something that we always have to keep looking for. Industrial land, commercial land for businesses, we always have to keep looking in that, and it's way better beneficial as a city to have that money set aside for future investment. That way, if an opportunity becomes available at any point in the term of the year, then we'll be able to make a decision and go forward. Otherwise, if we didn't have any reserves set for acquiring land, then we'd have to put it off and build a budget, go to the taxpayers for that project, and it could be a year later before we'd actually be able to acquire land for industrial purposes or commercial purposes. And then after you get the land, then you have to put the water and sewer in. So it's a hard choice for sure, but it's way beneficial for the municipality to do it in the fashion that we're doing it, rather than to refund money back to the taxpayer for short-term gain. That's just my opinion. Thanks.
Mr. Rapley, did you have your hand up? Are you okay?
No, I'm fine.
Okay, great. Anyone else have any other questions?
Thank you.
And the next is BFL Canada Risk Report, their preliminary report.
Chair, I think we're just bringing somebody on virtually.
Okay. Eric Sander.
It'll be a virtual presentation.
Perfect. I just wanted to confirm as well on my end. Perfect. Hector had access to the panelist position as well.
Hi everyone, can you hear me?
Yes, we can.
Okay, perfect. Thanks a lot for taking us in today to present the preliminary report. So my name is Hector Sancia, Vice President within the Risk Advisory Practice at BFL Canada Risk and Insurance Services. So we will basically be providing you with an overview of the preliminary findings of the analysis related to the actuarial engagement that was assigned to BFL to complete on behalf of the City of Quinte West. We also have Eric Sader on the line, who is the senior risk analyst within the team, collaborating with Caleb's team to basically bring this evaluation forward to your attention. So for purposes of the discussion today, we will be providing you with a general overview of the key findings. So the focus is going to be primarily on the executive summary. The additional pages that we included within it are for context, for your attention, and we can definitely go through them if necessary. But at this point in time, the main objective would be to give you the preliminary assessment and overview of the results of the analysis and how that ties back into the broader engagement um, that has been assigned to BFL. So I will be sharing my screen very quickly. Let me know when you can see it.
We can see it now.
Perfect. So within the executive summary, so the engagement overview, so the primary objectives of the engagement can be described as outlined in in this page. So the objective, the initial assessment basically provides a reconciliation of all the data with respect to the city's profile.
Is there any chance we could get you to speak up, or your volume could be increased a bit, please?
Can you hear me now? Is it better now?
A little bit, thank you.
Now I can try to dial in, but is it better now?
It's a little better, but if you could speak louder, that would help too, please.
Okay, okay, I'll speak louder just for purposes of the discussion. Okay, so the presentation basically will focus on the overview of the overall engagement as well as some of the key findings and the status of the project itself. So as you can see on the screen, basically the initial assessment is reviewing all of the data related to the risk profile of the city, consolidating all of the inputs with respect to the historical performance of a city as well as the exposure base so we can actually quantify the intrinsic value of your risk exposure. In order to do that, we obviously have to conduct different reviews and I have different sessions of back and forth with the city's team responsible for the insurance program. Once we actually have all that information, the objective is to determine the best methodology that will basically help us quantify your risk exposure. That exercise ultimately allows us to understand basically in the absence of insurance, what would be basically your overall exposure and how that exposure is segmented between the risk that you retain and what you transfer to insurance market. So ultimately, what this exercise will help out the city convey is basically make a better decision about the structure of the insurance program, but also manage the total cost of risk from different angles. That total cost of risk obviously pertains to the risk and the claims that you actually pay out of your own pocket, in addition to the premiums that you also pay to the insurance market to insure your risk profile. For purposes of the analysis, obviously we focused on general liability and errors and omissions. This analysis basically segmented the losses on the basis of those two broad buckets of exposure. And ultimately, once we have a quantifiable exposure, we map it against your insurance program so that we can understand, okay, what is, from an actuarial methodology perspective, what is the level of risk that you currently retain compared to what you're transferring? And is there an opportunity for the city to basically retain more or less risk depending on what the data is telling us? So the actuarial methodology basically provides you with a scientific overview of the value of your risk. Obviously, there's other qualitative components that are not necessarily taken into account in the methodology because it's just basically a mathematical kind of equation that provides you with that number so that you can make a better decision as to how you manage and retain and transfer risk. And ultimately, we can also provide you with guidance as to what is the value of increasing the risk retention from a corporate perspective vis-a-vis what the insurance market is willing to offer you as a pricing. So far, so good. No questions on this? It's clear? Perfect. So If we move on to the next couple of slides, so the project timeline so far, we have completed basically, we did a project kickoff, we have finalized the information gathering and review. As part of this exercise, obviously, we have to engage with the city stakeholders to validate a lot of those data inputs that allow us to create a holistic data set that reflects your risk profile. So that may pertain to the population density, it might pertain to the number of roads, and that data might actually accumulate over a different period of time, and then overlay it and compare it basically to your historical performance from an actual loss and claims perspective. Once we have those different data inputs, then basically what we have to do is just evaluate the losses from a historical perspective. So the main two components that we look at are frequency and severity of the losses, as well as the type of claims that you have incurred within your risk environment, but also those losses that may occur, that haven't occurred, that you currently basically pay an insurance premium for. So we're basically at the historical loss analysis stage. We're already moving into the risk exposure modeling exercise, which will basically allow us to create the quantification of the intrinsic value of your exposure. This exercise is already in place. It's already in progress. And we will basically be completing this over the coming weeks so that we can provide it with some additional key findings with respect to the alternative structures to consider. So all of this data, ultimately, what it will provide to the cities an informed decision-making process with respect to the current structure of your insurance program and how you can actually shape it up to provide the value that you would expect with respect to your financial capacity to retain risk, but also the historical performance and the expectation of having some level of risk transfer to mitigate the volatility on your financial statements. I'll pass it on to Eric Sader, who is going to basically be providing you with an overview of the executive summary and the key findings.
Thank you, Hector. Just to confirm, is everyone able to hear me properly, or do I need to speak louder?
No, you're okay.
Perfect. So to go over the executive summary and what we considered in our analysis, the first element that we always look at is the exposure that's facing the city. So that's looking at how your population has evolved over the lifetime of your program, how the area and the paved roads have evolved, and also what sort of services the city offers to its citizens. Further in the report, you can see which elements and which services are controlled by the municipality, which ones are shared with third parties, and which ones are managed by third parties. And you can also see that the city currently conducts building inspections and does have a liquid effluent discharge system in place, which changes the exposure of the city and informs how we are going to take different pieces of data into account. When looking at the sources of risk overall in the organization, the two major sources of risk that showed up the most frequently and the most severely for the city is snow and sidewalks and roads. So when you're looking at the causes of losses, those were generally the elements that were the most relevant when looking at the severity experienced by the city since 2011 to 2023. And the third one, and there's a quite important drop off here, is drains and water lines. But as you can see, the vast majority of the exposure faced by the city is within those two elements. In addition to that historical loss analysis piece, something we always want to consider is what sort of events, as Hector mentioned, can happen but have not historically happened. Your insurance pricing is not solely based on, and the value of insurance is not solely based on what you've experienced, but also potential events that you are yet to experience but are exposed to. The example that we always use is just because I don't get into any car accidents doesn't mean that my insurance premium for my car is going to be $0. Right? They take into account a certain probability of a catastrophic event occurring. In the same way, this is taken into account, and that's the source of risks that you can see from the industry. So here we can see three different situations that can happen, and three different industry worst case scenarios that we considered in the analysis, and that we will be considering through the actuarial pricing and modeling of the risk. So there's the potential for the liquid effluent discharge system at the water treatment plant to fail, which would be the worst case scenario overall. There's the risk of a severe injury due to a motor vehicle accident, whether it's due to the design of the roads or snow maintenance. And then there's the risk of an injury due to a poor building inspection. So using all three of these data points, we can also get a better understanding of what sort of events can happen that haven't historically happened, but that are included in your insurance pricing. When we then go over the actual historical performance, we have two different ways of looking at it. Number one is just a pure historical performance. So how much money was paid out to insurers in the past, how many claims were retained directly by Quinte West, and what was the premium paid in those 12, 13 years. Now, again, this data is not a good indication of the risk in the sense that it does not include those sources of risks that exist but have not materialized yet. However, it's a good indication overall to get an idea of how the city's been performing from a risk management perspective. And so the current loss ratio is at 48%. And so that is comparing what is the transferred losses over that time and how much insurance was paid to the premium, to the market. So this is essentially what that value is. The second value that we look at when looking at historical performance is what happens when you apply the current structure backwards. So over time, your deductible, so the amount of losses retained, will vary as time goes on. And so what happens when you apply that exact same loss history, but looking at a much higher deductible? And that shows an even better performance moving forward because the deductible has risen over the years. As such, this is useful information for us to consider when looking at our actuarial analysis. And this is the sort of information that we use to base our analysis on to see what sort of different retention options are going to make sense down the line actuarially. And once the model is completed, what sort of alternative structures that can be considered for Quinte West to essentially optimize the structure of insurance while keeping in mind the risk appetite and the financial capacity of the city to retain that risk on their balance sheet. Are there any questions on any of this information?
Yes, Councillor Quincy?
Yeah, thanks very much. One question on our total performance. So just doing some really simple math. So for every $2 in premium we pay, the insurance company's been paying out $1 for claims. Does that sound about right?
Exactly. So that
Thanks.
would be considered from a high level performance. Now, again, the two things to keep in mind are number one, this loss ratio is not the same loss ratio that is experienced by the insurers. The reason why is this only looks at claim amounts. And so it doesn't consider things like expenses on behalf of the insurer that they have to pay to manage and maintain those claims. The other element here is, again, the source of risk that have not occurred but could occur. But yes, if you're looking at it from a purely historical perspective, that is an accurate assessment.
That's what I was doing. Thank you.
Perfect.
Thank you. Any other questions? I have one. When someone makes a claim and the city will do something to reduce that exposure in the future, are you taking that into account for future?
So you mean from a projected frequency perspective?
For example, if there's a standard for clearing snow for whatever, and we didn't meet it one time, but we've increased our standards, or if there's road design that was under par that we fixed, do you take those factors into account so claims in the future shouldn't be as high?
Okay, I see your question. So the look that you get is basically this is just primarily from a historical perspective. We're not mapping out control environments against the likelihood of a claim. So if in the future that would be something that you're interested is not currently within the scope of what is currently being evaluated. So this is just purely from a historical perspective, looking at what claims have occurred, what is the frequency of those claims, and what is the severity of those claims, and what if the past was to actually reproduce itself in the future.
Thank you. And right now, there's no recommendations on deductible limits. There's no recommendations on additional coverage. That will all come later. Is that correct?
Yes, it is correct. So that the recommendations will come from an actuarial perspective. So for additional coverages and everything that would be outside of the current this scope specifically, that would be pertaining to advices related to insurance specifically if you need to purchase additional coverages. But the adjustments and proposed suggestions with respect to deductibles and limits yes, they will come after this analysis.
Great, thank you. Any other questions?
Mr.
I
Chair.
just wondered if you want to follow up on what you're suggesting is that when we have issues and we make repairs and do improvements, do they take that into consideration when they, I guess you'd say, come back to us with an insurance coverage quote?
Okay, so your question is more related to insurers taking into account the improvements made by the city.
Yes, that's what they're
Is
asking.
that correct?
Correct.
Perfect. So that assessment would actually have to be provided by one of our other colleagues. So it's not part of this current scope. The insurers do take into account the changes that you make to your risk environment and the improvements that are made after a loss. So they want to see obviously like risk improvement. Now, to what extent those improvements are taken into account, it's really subject to the underwriters that are currently on your risk. But that's something that we can verify and get back to you on.
I can perhaps help with your question.
Just before you speak, if we could ask our Director of Finance to make a comment, please.
Yeah, thank you, Chair. I just want to clarify where we're coming in with the actuarial analysis. We will see a final report come to the fall Audit and Risk Committee, talking about a bit of our historical, which they've done here, a bit of the actuarial analysis. This is a separate thing. We'll use results to make decisions, help us make decisions. But really, when it comes to us going to market in November, December to the insurance market, we provide a lot of information about our standards, the facts about the city. So if we do change our plowing standards, like you mentioned, that might reduce the overall premiums that were given by the market because we have higher standards, let's say, or those higher standards reduce claims, and because we have lower historical claims, our premiums go lower. So there's two kind of ways it can affect us, but that's kind of outside of the scope of this project, which is really just the actuarial analysis looking, yeah.
Okay, thank you.
I just had a question. Chair?
Yes, Mr. Stafford?
Just if the improvements for our snow clearing and the improvements for our sidewalk and road maintenance is outside of the scope, then why is it one of the conclusions? Why is it the top conclusion? That we're targeting risk capital deployments towards documenting and improving snow management and sidewalk road maintenance would help reduce the greatest sources of loss in progress. So if we're talking about this, it's one of your key conclusions. How come it's outside the scope of this project is my overall question.
Okay, so the scope of the project is basically looking at the historical losses and then looking at specific trends with respect to the frequency and severity to see what the data tells us with respect to potential risk improvements that could come out of that. So the question that was asked just before, if I understand correctly, was just with respect to the insurance market taking into account the improvements that have been made and how that's positioned in the marketplace, which would be a separate stream of the program marketing exercise, whereas this exercise that we're talking about right now basically looks at the historical performance and then provides you with recommendations for risk improvement based on what the data is telling us.
Okay, so you're going to give us the history and then we have to run with the future. Is pretty much.
Exactly.
Okay.
Exactly.
Okay, thank you very much, Chair.
Thank you. Councillor Quinte, did you have another question?
No, I was going to try and answer your question, if that helps. So, insurance companies always have risk that they are measuring. So, I'm just going to put this into the example of your house, because sometimes lots of people can relate to that. So, you have an asphalt shingle roof on your house. The insurance company knows that you have a roof on your house, and you're, in this case, using asphalt shingle roofs, and they insure your whole entire home, including the roof. So then you come along and you say, okay, well, I'm going to put a steel roof on my house because it's going to last longer, it's going to be subject to less claims because it's a steel roof. So you put the steel roof on your house, but it's still subject to risk. And as far as the insurance company is concerned, perhaps maybe now that risk is reduced, but that's up to the insurance company to decide whether that risk is slightly less, but they're still going to insure your roof, there's still a risk to that. It's a similar to what we're talking about when in this presentation they're talking about snow removal is one of the categories. And if we should change a process to improve something, the insurance company still has a risk, and it's up to them to decide whether if we've made a change or we didn't make a change, if that's beneficial as far as their rating or their standards that they use for factoring into their calculations to determine a premium or a reduction in premium or an increase in premium, or maybe they suggest something else altogether. So there are multiple insurance companies, and that's one of the reasons why we have BFL. BFL is an insurance broker. They are here to guide us through the insurance process. And so they may go to multiple markets and say, this is our snow clearing process yesterday, here's our snow clearing process today, and perhaps maybe one of those markets will go, yeah, great, that's perfect, that's exactly what we're looking for, and quote a price, and then BFL would come back to us, or they've made a decision, this is the way to go, and that's how the process works. So this report isn't talking about what we might do to reduce risk in the future. They're just getting us a report to tell us where we are today and how we've gotten here today. And in the end, once we complete this report from BFL, BFL can then go back to our markets, the actual insurance companies, and report to the insurance companies that this municipality is taking steps to reduce their risk and are eager to reduce our risk, because we've done many things to help reduce our risk, such as building inspections that we've implemented over the years, and we have a great staff department. We are dedicating staff to the insurance for risks and doing some of our own claim processes ourselves, and not always phoning BFL every time there's an incident, depending on what that incident is. Does that help in any way, shape, or form?
Yeah, just wrong, Chair. I guess what I was looking for was to see where the line of responsibility comes into. So they're looking at our past. They're going to tell us what we've done that's been a benefit. But when it comes to now and moving future, such as, like you said, referring to a home, if we're talking about a roof, it's got a shingle roof. Well, we know it's really windy around here. So I've had shingles blown off a lot, and we have that constant repair, those damages, leaks, whatever happens. But who is the person who brings up the conversation as we should go to a steel roof? So from my understanding, they're going to tell us that, as an example, not in reality, but maybe we probably will talk about our shingles in this stage, is that shingles are an issue. Boom, that's all they say. Then it's our discussion of how we correct that. Or are there going to be recommendations such as we should be doing this and this and this to factor in and make us a better customer for the insurance company?
The insurance broker can make suggestions for sure, and so can the staff, and so can the council. But in the end, it's a council decision whether we're going ahead with those recommendations or deciding on what steps to take. So the buck ends with a council vote at a council meeting, but our broker can make suggestions, and they'll make suggestions to our staff. Our staff will then do a report and bring it back to either this committee or a decision of council for a future date. So it'll be the council's ultimate decision.
Perfect. Yeah, just trying to find that the scope of responsibility for each individual
yeah, of course.
stakeholder in this project. Perfect.
I'm glad you asked the question. Thanks.
Thank you very much.
Sorry, just to, again, we have staff here, so we do have a risk management plan. So this audit risk committee does review our risk management plan, what's in that plan, if it includes more training, if we've evaluated with our facilities or public works staff or engineers on certain things like roofs or whatever it is. We'll provide those recommendations as well from a professional standpoint to the audit risk committee to look at the plan overall. We're not necessarily looking for the scope of work of the audit and risk committee members to come up with solutions out of this project.
Thank you. Now, thank you very much for your presentation. The resolution, if someone would like to make it,
Are they all finished, or do they want to keep going?
No, that was basically it.
Yeah, thank you. Yep. So would someone like to make the resolution? The committee received the preliminary report. Councillor McHugh and seconded by Mayor, Mr. Rapley. Thank you. All in favor? Thank you. Passed. Thank you.
Thank you.
Thank you, everyone.
Thank you.
No, Mr. Chair, can we ask how we made out, with the vehicle we just had, or not? Not at this time. The one that caught on fire?
Yes, through Chair, so we do have claims happen throughout the municipality. The latest one that you're referring to was with a vehicle in our own operations center. And so we had our adjuster review what's happened there, and it is a write-off, so we'll go ahead and submit the claim and replace that truck. Anything more you'd like to review on that one, or?
I mean, okay, so you had the sorry. Can't hear anyway. So you've had the adjuster in and they've written it off?
Correct.
Where are we headed now?
We will procure a new one.
What year?
Thanks. Moving on. Correspondence, I believe there is none.
Mr. Chair, just before we get to the minutes, can before we get to the staff reports, can we go back and do the minutes? We haven't done them yet.
Approval of the,
We did approval of the agenda, we just didn't approve the minutes from the previous meeting.
Councillor McHugh moves it, Councillor Siddell seconds. All in favor? Thank you. Approved. Sorry. Staff report 24018 from Matt Hodge, Minister of Finance. Would you like to comment on that?
Through you, Chair, pretty much Jeff spoke to the statements, and the audit went well. We worked well with Wilkinson, and we got all the new accounting standards and policies and procedures in that we needed to, and we can move on to getting them into the FIR and keep on going.
Mr. Chair, if I may, Mr. Hodges
Yep,
being
go
humble,
right
there was
ahead.
a lot of work put into the audit this year, especially with asset retirement obligation and financial instruments. So there's a lot of work behind the scenes. Also, Victoria Thompson working on behind the scenes as well with Mr. Hodge. So there's a lot of work, and also with Wilkinson reviewing the new standards and that part of the new statements. Yeah, just very proud of our team to be able to have this in front of the committee by May 6th, just in time to get our FIR done and submitted by the deadline. And I know we're one municipality that out of not all the municipalities get it done this quick. So I'm proud of the fact that we can get it done and in front of you so quick.
Well, that's great. Thank you. And just to say the FIR's financial information return that's required by the province, it tries to put all the different municipalities in the same light in different things. So it's just a different return that the province requires, so different municipalities can be compared to each other. Thank you. So there's 5 resolutions for this, and the first 3 recommends council approve the 2023 Quinte West financial statements, Quinte West draft trust fund financial statements, and the wastewater and water financial statements. And the other 2, the committee receives the 2023 Quinte West Public Library draft statements, and it also receives the 2023 Downtown Business Improvement Association statements. Okay, Councillor Siddell will move it, seconded by Councillor Quinte. And if you have any more questions, go ahead.
Thank you, Mr. Chair. So just a few, kind of digging into the weeds a little bit, but all of the trusts I see, they're cemetery except for McVicker Trust. I'm just wondering what that trust is.
Through your chair, so that's a carryover trust from a police investigation, I believe. It goes way back, and maybe the mayor, Mr. McHugh, might have more history on this one, but it's been set up and it's required there, I believe, as a an award to any information on that police investigation.
Okay, thank you. And then the water and sewer, we didn't really talk, we talked about the cash surplus for the city, but I'm just wondering if, it doesn't have to be pulled out today, but I'm just wondering if we could get what the cash surplus is for the water and the sewer systems?
Through you, Chair, it pretty much came to balance out. It was like $40,000 over under, so the budgeted transfer to reserves pretty much matched the actual transfer to reserves, so there was no real cash surplus or deficit.
Great, okay. And the library statements, I'm just wondering, that looks like a surplus as well. Am I correct? And I'm just wondering if the library, if those reports go back and get accepted by the library board?
Through you, Chair, yes, the library board receives the statements and approves their statements, and there was a little surplus, yes.
Okay. And the DBA as well, that's a surplus of $17,000, I think. And does that get approved by their board as well before it comes here?
Through you, Chair, yes, that's correct.
Okay. Okay. No, those are my questions.
Thank you. Any other questions?
No, just a comment, Mr. Chair. Through that question, the fact is that the sooner we let somebody else look after the cemeteries, the more money we'll have in our pocket.
Thank you. So I call a vote. All in favor?
You're voting on all 5 of the?
Yes.
Yeah, okay, thanks.
Thank you.
Just confirming.
Passed. Thank you. The next is staff report 24019 from Matt Hodge, Master of Finance, year-end debt balances. Would you like to comment on that?
Through you, Chair, yes. In the report, you can see that we do have a lot of carryover projects and projects coming up in the future. We did take on some debt at the very end of 23, so the debt will be starting to increase, but in the next few years, there is potential for a lot more debt to be coming with DC-eligible projects that will require debt to be completed, since we don't have enough DC reserves available to do all these growth projects that are coming up. So the debt from here will be increasing, although a lot of it will be DC development charge related projects.
Now, the province, you're allowed to only carry so much debt, and they give you a limit on the debt. And we're at now, what, about 68%? But we're not worried about exceeding the limit that the province is giving us on our debt levels. Is that correct?
So through the chair, the annual payment limit was submitted to council, I believe was the last meeting, correct, around, you might be correct at the 68%. Yeah, I think overall, council should be aware of that number now that we're over 50%, basically over 12% of our own source revenue. That's definitely a consideration. We heard it during budget, and we'll hear it again this year. We really have to monitor that closely over the next few years, over the next decade, where that's trending, because there is a limit there that we need to be aware of.
Thank you. So the resolution, the committee receives the year-end debt balances as attached. Would someone like to make that? Councillor Quinte, seconded by Mr. Stanford.
Just a question.
Go ahead.
Sorry. Thank you, Mr. Chair. So most of the debt has got some kind of revenue offsetting it, except for, from what I can see on here, is there's 2 capital projects. There's the Willow Road Bridge, the $4 million, and the Marina Breakwall for $7 million. Are those both tax recovered out of tax levies? Is that what the plan is going forward with them?
Through your chair, yes, that is correct. Those are full tax levy.
Okay, thank you.
Thank you. Any other questions? All in favor? Passed. Thank you. Well, next is staff report 24020, from Matt Haas, 2023 development charges, treasurer's statement. Would you like to comment on that too, please?
Through you, Chair, yes, you can see the balance is increasing for our development charges reserves, up to $10 million right now. We bring in just over $2 million per year, but with all the potential growth projects that are required for the city, the balance isn't enough to complete all these projects, so that's why we keep referring to development charge debt. We don't have the reserves available, so the plan is to be able to do these projects, we're going to have to take on debt and then use development charges to make the debt payments to complete these projects.
And is there a development charge study coming forward? And the rationale for development charges, is it that development charges pay for new development?
Correct, Chair. Their growth to pay for growth is the idea behind the development charges. And yes, there will be a development charge study coming to council. June is the plan, but yes, we're in the
Great.
works.
Thank you. Yes, Councillor Quincy, go ahead.
So just to clarify, with the development charge fund, and in one of the points where you were talking about the financial impact on page 116, it's stating $473,392 is the city's contribution for non-statutory exemptions. So that's us, the taxpayers, making a contribution towards development charge fund. Do I have that correct?
Through you, Chair, yes, that is correct. That is for the, currently we have an industrial exemption, so there would normally be a development charge collected, but since we, the city has chose to exempt it, we have to commit our own city funds in.
So that's 0.5% of the tax levy going towards development charge for growth for the city.
Correct, and this is something we will be considering and speaking about when the next DC study
And then
comes
with
out.
provincial changes coming towards collection of development charges for certain types of housing, that's going to also affect how we, the taxpayers, contribute to development charge funding. Thanks.
Thank you. Any other questions?
I think he's right, Mr. Chair, but the sad part is that development charges should be coming to us. Province is hungry for money, and they're taking more than they should be. I've stated that before, and I think we all feel the same way. Thank you.
Thank you. Okay, all those in favor? Passed. Thank you. The next is staff report 24021 from Mr. Hodge, Minister of Finance, 2023 year-end reserve and reserve funds. Thank you.
Through you, Chair, this report does tie in as well to the debt and the development charges. The reserves are increasing, but with that increase, we have committed a large portion of these reserves to future projects and capital projects that have already been approved. So the number is increasing, but the uncommitted amount is not as large of the number that you see in the report. So,
Thank you. And the resolution, the committee receives a year-end consolidated reserve and reserve fund report. Councillor McHugh, Councillor Siddell, all in favor? Passed, thank you. Next, staff report 24022 from Matt Haas, Manager of Finance, regarding the 2023 investments. Would you like to comment on that, or?
Through you, Chair, yes, this is a Q4 update now. Most of our investments are in the one JIB. The change also shows in the financial statements now that in the financial statements we're doing the fair market value for the investments. So the Q4 reports now that we get from one JIB translate into our financial statements, and the up downs will show in our financial statements as well for the market value changes.
Thank you. And I've noticed too, the reports are now giving a consolidated returns, the returns for the last year, so they are improving, and we're thanking them for making those changes. I still feel we need to know the total amount being charged by them, but they're going and listening to us and making improvements. I'm quite happy about that. And we also, last report, got the quarterly results for 2024 for the first quarter, and they have improved too. So I'm quite happy the way things are going, and I'm also happy that they're listening to us and making changes as we ask. Thank you. Committee receives the report regarding the 2023.
Mike.
That committee receives staff report 24022 regarding the 2023 investments.
I'll move it.
Moved by Councillor McHugh. Seconded by Mayor Harrison. All those in favor? Thank you. The next.
Through you, Mr. Chair, before we leave, it's all interesting. I was at Woodland Heights on Saturday, and that's our new subdivision in the West End, and they're targeting people coming out of Toronto who are selling their homes and coming here and buying. So they're not, I guess you'd say, concerned about the increase in interest rate. Of course, we like the increase because we're possibly doing a little better on our investments, but the local developers having trouble with selling houses. So it's everything you do is a double-edged sword. Some win, some don't. Anyway.
Well, there's not much we can do about the interest rates. At least down here, our prices are a lot less than the city.
They are,
So,
yeah.
but thank you.
Where I was at Woodland Heights, most of the homes are $1 million. Doesn't scare me, it shocks me.
Pass, all those in favor, pass, thank you. The next is staff report 24022 FIN, 24023 FIN by Melanie Masseur, Manager of Purchasing. Overview of the 2023 Insurance and Risk Management. I think your mic's on, Mr. Rapley. Thank you. Would you like to go ahead?
Thank you, through your chair. This report's just intended as an overview summary of 2023, our activities in the risk and insurance department, as well as just a snapshot of what we were dealing with in terms of claims management and some of the key financial impact numbers that we looked at last year.
Thank you. Are there any questions on this report?
I'll move it.
Councillor Quinte moves it, seconded by Councillor McHugh. All in favor?
Just one quick question.
Okay,
before
no
we vote on
problem.
it.
Go right ahead.
Just on the cyber insurance, so that's a 6.72% increase. That seems relatively low. Is there something that we're doing that keeps that, I mean, 7% increase is kind of high, but it's low for cyber insurance, so if you want to comment.
They do a fairly rigorous review with us for cyber insurance annually, and we do meet a high level of criteria for the insurance provider.
Thank you.
Comment, Mr. Chair.
Yes, go ahead.
As I understand it, Quinte West is lucky with some of the investments that council's made over the past 5 to 10 years or so in regards to our computers and our IT department, and some proactive education in the past 5 or 6 years regarding making sure that the staff are aware of what to watch for when it comes to the use of their computers, and that has enabled our city to maintain our cyber insurance, as well as keep the increases somewhat moderate in comparison to what's happening to other institutions and or businesses and or municipalities. And there's also comment or article written in here about the hard market as far as insurance goes. And I don't expect that to change anytime soon. So if we as municipality think that we're going to be working extra hard to not only educate our staff with training and do whatever we can to reduce our risks wherever possible, I still foresee that we are still going to see a sizable increase in our rates just due to the very nature of what's happening out there in the world. And as far as insurance companies go, it's not optimal as far as the insurance companies see risks and market conditions, worldwide issues that are happening, and even here in Canada with forest fires and flooding and storms and all that sort of stuff. It's all taking a toll. And from articles I read, that incident that occurred in Baltimore, as far away as Baltimore is from the city of Quinte West, it is a long ways away. But because insurance companies are connected behind the scenes, it is going to affect everybody's insurance, your house insurance, your car insurance, and the city's insurance as well. That's just my personal point of view. Thanks.
Thank you. Any other questions or comments? All in favor? Thank you. Passed. The next is Staff Report 24024 FIN from Matt Hodge, Minister of Finance, regarding the Tangible Capital Asset Policy and Procedure.
Thank you, Chair. This policy was started back in 2009 when tangible capital assets had to be put on the financial statements. This version is the first version that's been put on the new policy template. So now it's on the new policy template that we have for the City of Quinte West, which also now includes a procedure. The changes were really driven from cleaning up the language around the asset disposal portion of the policy, as well as adding in the asset retirement obligation portion.
Okay, so basically, the policy, you want to write off the assets over the useful life, correct?
Through your chair, yeah, that is correct.
Thank you. The resolution committee receives the report on the tangible capital asset policy. Moved by Councillor Quinte, seconded by Councillor McHugh. Thank you. Question, go right ahead.
A couple of questions in regards to policy. So this is to receive the policy, but I believe we need to approve the policy. Policies such as this, I believe, are under council direction. And one of the questions I had as well was in with regards to the legislative history. It's been moved down to the bottom. I think I had questions about, what were the changes? The policy templates used to have, I believe, the policy numbers and the changes at the top, and now it's down at the bottom, so it's just a change. I'm not sure. That's more optics, but it's just, it's of use to know, because my question was what's changed in the policy, because we don't see a report. It's difficult to, when you're reading through the report, to know what exactly has been changed, if there's other words, et cetera. But I guess my question really relates to the policy, and are we recommending that council approve it then?
Yeah.
I believe you're
Yeah.
correct. It should be to approve.
Yeah, if I can speak to that, the recommendation is that council, or the committee recommends to council that they approve the tangible asset policy. So this will eventually go to council for final approval as well.
Thank you.
Don't know if staff wanted to comment on any of the major changes besides the ARO. I know that that was a huge endeavor this year to add those asset retirement obligations, and there was a comment that was made about leases that we didn't find any that needed to be reported out, but the buildings, and maybe just if there was anything, that's all been added in now, so going forward, we're square with PSAB.
Through your chair, yes, we'll continue to look into our policies. There's a general summary of all of our accounting policies and PSAP summaries in note 1 of the financial statements. These separate policy documents just get into a little bit more detail. So our goal is maybe during interim, like when the auditors come in November, December to test our systems, we'll start looking into some of our policy documents and just bulking them up to make sure that we've got good policies and procedures to go along with the PSAB requirements.
Thank you. That's it? All in favor? Thank you. Next is new other business.
Has to be excused, Mr. Chair.
Okay. Mr. Sanford, would you have anything?
Not at this time.
Okay, thank you.
I'm good, thank you,
Councillor
Chair.
McHugh, Councillor Siddell, Councillor Quinte.
Nothing, thanks.
Thank you. Is Mr. Sanford still on there, or Rapley still on there? Okay, thanks. Anything staff would like to add to any of this, or? And thank you for all your work to get this done and get done on time, which is really appreciated because I know a lot of other municipalities aren't on time, so thank you. Thank you. Move to adjourn. Councillor Siddell, Councillor Quinte, all in favor? No. Okay, everyone can leave but Councillor McHugh.